I'm really glad, Christina, you're with us today on this particular topic. This is sort of some of the trouble spots in the tax landscape that you observed this past tax season.
Sure. With the May 1st extended hurricane deadline, we finally got that past us. So we put together the top 10 tax trouble spots that we've observed this year.
Sure. All right. So a top 10 list, a la David Letterman. For those of you who don't remember who he is, he was a guy who had a late night show, did a lot of top 10 lists. Anyway, I guess I'll take the first one. That is one that I think we're hearing a lot of conversation about, and my goodness, it seemed to be nearly every other return that we were looking at this past tax season. This was an issue, and that has to be the taxation of Social Security. The more you see your income sort of just trickle up, maybe it's because of more interest or just COLA increases or any of that, then the more we saw that Social Security was becoming more and more taxable. And it doesn't matter what income we're talking about, whether it's investment income or property income, any of those types of incomes all add. Doesn't matter what the source is, it all adds to create the threshold of which that triggers the taxation on your Social Security. So one of the issues, and we've certainly talked about it on the program before, is that those thresholds that trigger the taxation of Social Security have not in fact changed in 40 years. No, they were not ever even indexed for inflation. So that means that over time, you have a lot more Americans paying tax on your Social Security. Big conversation, obviously, in Washington about the taxation in Social Security, or should I say the first time we've sort of heard that being part of the tax conversation in Social Security. So stay tuned on that one. We're certainly hopeful that, I don't know that you'll see a full elimination of it, but maybe just an adjustment of that threshold to make it less taxable for a lot more Americans than what is happening today, that's for sure.
Or at least start incorporating inflation into the amount that's taxable. I mean, the tax code does that for so many things. That's one of the few items that's never been adjusted for. So our next item up is the premium tax credit recapture. So we still keep seeing this from several years ago. It comes back to the Affordable Care Act, where you're getting health insurance through the marketplace. And when you get insurance through the marketplace, there's the potential to receive a credit for that insurance based on your income. The problem is they make you calculate your income. So most folks really don't have a grasp on what that is. You know, they maybe just consider their W-2 and not all their sources of income, or, you know, if it's a husband and wife, they're not considering the whole family's income, things of that nature.
And you always think net, right? You always think net, not gross. What's your income? You always think net, but the reality is that it's based on your gross.
In there. Yes, very true. So if you incorrectly calculate your income, there is a possibility that you have to repay some of that premium tax credit back. Or maybe there is a circumstance that is unforeseen. You had to take some investment income, or maybe, you know, a job opportunity popped up and your income for the year changed. So, you know, those would all be circumstances where you would potentially have to pay back part of that credit. And we've seen some folks have to pay 100% of that credit, which unfortunately in some circumstances could be like $15,000 to $20,000.
It's going to be a significant impact on your tax return. Got to be really careful with that one. You're right, we continue to see that one being an issue. The other one we saw as an issue and this is probably more unique to last tax season, has to deal with higher interest rates, things like savings accounts, money markets. Finally, after years of not paying a whole lot of interest, last year was a year where you actually made a good bit of interest in those types of investments. And then because of how well the market has been doing prior to sort of these past few weeks, the reality is that dividends, capital gains, those kinds of things also went up. The tech-heavy growth side, the Magnificent Seven, Christina, that you were talking about earlier, those also generated the potential for a lot of dividends, a lot of capital gains. And so you saw those numbers go up, and then obviously that's taxable. And then that certainly had a pretty significant ripple on many people's tax returns for this tax season.
Right. It actually flowed through to the first topic, whereas it's increasing your income,
Sure.
hence increasing your Social Security tax.
Right.
Well, the taxable amount of your Social Security. So our next is, are you making the right quarterly tax payments? So if you don't have tax withholding throughout the year, you're required to make estimated tax payments throughout the year. Now, those are based on your prior year tax return. So if you've had circumstances that change your tax situation from one year to the next, those quarterlies may need to be adjusted because they are based on what was filed in the previous tax year. So has your filing status changed? Did you go from married to single or single to married? Are you losing a dependent because a kid is coming off your return, they graduated from college, or maybe you have a new bundle of joy and you're going to have another dependent. There's a lot of different things that can change. Changes in investment income,
Sure.
The capital gains is a big one. So one benefit to really having a tax professional is that they would have the ability to have that conversation with you and notice those changes and make adjustments to your estimated tax payments to make sure you are making the proper payment and certainly not overpaying the IRS, which none of us want to do, or therefore underpaying as well and getting hit with a little penalty.
Yeah, no, and certainly with interest rates where they are, I mean, that interest and penalty charge can really add up. So you certainly want to be careful on this one. And another one that sort of resurfaced this year after a few years of absence, if you will, is this notion of being able to deduct student loan interest. Now, not that the student loan interest deduction went away, but most people wound up finding that as a result of COVID, that their loans wound up going into deferrals. So that meant that if you're not paying on your loan, then you're not having any interest deduction. And that certainly started to come back with sort of the suspension of those deferrals and a decent deduction that you wind up being able to take on your tax return for that student loan interest. The tricky part is that you might have to seek out that tax document. That interest generally gets reported on a 1098, and you might have had to kind of look around and see and find that document online because more and more people aren't mailing these things.
Yeah, absolutely. And that's our next tax topic is tax forms no longer coming in the mail to you. So many times I've had conversations with clients going round and round, people swearing they never got the tax form, they don't have it from XYZ company. But I'll sit there and look at their tax return, know their circumstances, and basically have to negotiate with them or try and finagle them to call the company and, realize just because they didn't get the form in the mail doesn't mean it wasn't issued. You got to check with all your companies and make sure, or even go online. Because here's the thing, the IRS doesn't care that you didn't receive the form. They just care that it was reported to you and you have to pay taxes on it. So many companies are no longer sending those out in the mail. That's what we're finding. You have to go to their online portal and download it or print it or whatever the case may be. You may even have inadvertently told them not to send you the tax form by going paperless. And a lot of people just don't even realize that.
No, and that's a biggie. And I think people kind of forget that is, the days of getting all of this in the mail, it's over. So it's on you. The burden is on you to track down and find those tax documents. And I know, Christina, as you were saying, you worked with clients to try and find where it is. And those tax documents sometimes can not be easy to find when you're in the portal looking for all of that. But anyway, we're going to take a break and continue the conversation on kind of these tax hot spots that we observed this past tax season at Nelson Financial Planning. This is Joel Garris and Christina Lamb here on Dollars and Cents.